Hey, good afternoon, everyone. My name is Jeanmonod. I'm Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Thank you for joining us. I'll introduce our subject matter experts here in about a minute and a half. We'll let everyone log in. We had a lot of people register for today's webinar. I think it's a great indication of everyone really looking to grow their business in 2023. So we'll get started here and give it another minute. Still people logging in. Just some points of interest. This is being recorded. We will get this out to you before end of day today. This is going to be really interactive, so please use our question queue, which I did not pull out here, sorry. This is going to be interactive. If we don't get to a lot of your great questions, we will have your account executive reach out and answer your question directly. Everything we're going to do today is off of our website. So a lot of people in the past has asked us for slides. Everything's being navigated through our website today. And again, we'll get a copy of this recording out to you before end of day tomorrow. So give it about another 30 seconds. So a lot of people logging in. Great. Hopefully everyone's having a great February, and we're going to hopefully give you some tips and tricks today to capture more business and give you some tools to use to grow your business. So, all right, let's get started here. Still some people logging in. This is being recorded, so we will get this recorded out before end of day tomorrow. At the end of our webinar, we have a survey. If you could just take a couple of minutes to fill it out, give us some information on things we could do better. So great. All right. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Thank you for joining us here today. Today we're going to do a deep dive into our debt service coverage ratio program. We call it our investor cash flow internally. But I've got two great subject matter experts here on the call with us today. Christy Best, please introduce yourself.
Hi, yes, I'm Christy Best. I am the account executive for the greater San Antonio area. And like John said, I want to echo that. Thank you all so much for giving us some of your time today.
Yep. And Javi Naranjo. Javi, did I pronounce that correctly?
You did. Good morning, everyone. I'm Javi.
Go ahead, Javi. Sorry about that.
No worries. Good morning, everyone. I am Javi. Been in Angel Oak for 2 years already, and I can't wait to talk to you guys about this program. It is my favorite.
Yeah, and Javi and Christy have both done these webinars before, and obviously they're back for a repeat performance. They do such a great job, and they have a wealth of knowledge here today. So, as I mentioned, this is being recorded. We will get this recording out before end of day tomorrow. Everything we're going to do today is off of our website, so it's really easy to use, easy to navigate. But before we dive into our debt service coverage ratio, we're going to do a quick poll here. And the question is, who has originated a debt service coverage ratio loan in the last 12 months? So we'll let some people get some answers here. Let's see how the poll's doing. Give it another minute. One of the things I do want to talk to you today about is, really what the Mortgage Bankers Association is forecasting for 2023. And they're forecasting purchases to be down 10% and refinances down almost 50% compared to last year. So, and if you really look at last year, refinances were down actually 280%. So the box is getting smaller and smaller. So that's why we're here today, to help you grow your business. So let's look at the poll results. Wow, this is the highest number ever. 20% of you, yeah, it's crazy. 80% have not originated a debt service coverage ratio loan in the last 12 months. That's actually, I think, almost an all-time high. I think in the past we've had about 70%. So what I think is telling is everyone is really anxious to learn about this program and grow their business in 2023. So let's get started. Christy's going to take us through some of the highlights. And again, we call it our investor cash flow but everyone in the industry knows it as a debt service coverage ratio program. So Christy, please give us some highlights here.
Yes. Okay. So the investor cash flow loan, in order to satisfy the ability to repay, we're going to use the cash flow from the property instead of the borrower's personal income. So these loan amounts, we really cover a broad spectrum of loan amounts with this. So as little as $75,000 loan amount and as high as a $1.5 million loan amount. Again, the qualification is based off of the cash flow of the property. So there will be no personal income or employment on these loans. Something that a lot of investors really love about, non-QM and DSCR is that they can close in an LLC. So we have that option for these borrowers to close in the LLC. They are still personally financing the property. They're still going to use their personal credit, but they can close in an LLC. And that LLC has no seasoning to how long it has to have been opened. They could have opened that LLC yesterday, as long as all borrowers on the LLC are on the loan and that it was set up to manage real estate. So that's something that's really attractive to investors. There is no limit on the number of properties that the borrower can own. One thing that the first question I always ask when I'm looking at these loans is, does the borrower own a primary residence? Okay, so that's the first thing that we're going to want to verify. We want to discourage the motivation to use this to purchase a primary that the borrower doesn't have the ability to repay. So you can do this purchase, cash out and refinance. The program goes down, allows for scores as low as a 680 and goes as high as an 80% in the LTV. We do have a 40-year interest only option on this. And although the loan is going to be qualified on the 30-year fully amortized payment as far as the cash flow goes, a lot of investors really like this option of the interest only to hold on to a little bit greater cash flow in that property. So how that loan works is it's going to be interest only for the first 10 years, and then it's going to roll into a fully amortized 30-year fix, making it a 40-year term loan. You are not going to have loan amounts greater than $1.5 million here because that is the max loan amount on the property. But so there's that option. We do offer non-warrantable condos. The biggest reason that we're going to see those specifically on this program is going to be the non-owner concentration. So it could have 100% non-owner concentration, and that's okay with us. And we do allow for short-term rentals on this program as well.
Great, thank you, Christy. Yeah, some questions coming in hot and heavy already. So Christy, you mentioned purchase, refinance, cash out. Javi, I want you to talk about delayed financing. It's slowed down a little bit lately, but there's still some pockets around the country that are still hot that, we still have multiple bids. Talk about delayed financing on this, Javi.
Yeah, so delayed financing is kind of that hybrid you see between a purchase and a cash out. Essentially what it is, inside of 6 months, your borrower might have to purchase that property cash so they can secure that property. Like he said, some markets are still hot. So when they want to get that cash back, what we do is we'll give them a cash out using purchase guidelines. Essentially what we'll do is we'll even give them the rate of a purchase, but they'll be getting their cash back and to recoup some of that cash that they gave out of pocket. And inside of those first 90 days, if they used hard financing or gift funds along with their cash, they can even get some of that back as well.
Yeah, great point. Thank you, Javi. And Christy, we talk about, savvy investors and is this program for, a first-time investor or, a long-time investor? Kind of cover both ends of the spectrum here for us.
Absolutely. That is a question that I consistently get from my originators, and we don't require any experience for that investor. If they own that primary residence and they're just looking to jump into the game and this is their first investment property, we can do that. I do find that the very savvy, experienced investors love this program, partly due to the simplicity of it. They don't like to, I have a saying, they don't like to step over dollars to pick up pennies. They want a loan that they can close quickly and requires the least amount of paperwork. So they love that they don't have to supply lease agreements for other properties, and they have no limit on the number of properties they can have financed. So it really is for all investors.
Yeah, and I kind of went a little out of order here. You guys should stop me here a little. And Christy touched on it a little bit here, Javi. Talk about the 1003, right? The loan application. You know, I kind of skipped right past that and went to questions. We got a lot of great questions coming in here, so please keep them coming. But we really want to teach you all how to be really experts on this program. So Javi's going to cover some of the things we want to see and some of the things we don't want to see on the loan application. Sorry, Javi, go ahead.
No worries. So one of our senior underwriters always said the 1003 is basically the story of the borrower. She can tell the whole borrower story using that 1003. So that 1003, you need to fill it out completely. The only difference between this 1003 and your regular Fannie Freddie 1003 is that we're going to tell you not to disclose any income or employment. You're going to leave that blank because, again, this is a no income, no employment loan. So everything's going to be filled out, especially fill out those REO sections. We need to know what properties they own, especially if they're a seasoned investor. It might take some extra time, but the more properties, the better it looks for them as well, because it shows how seasoned of investors they are.
Great point. Mm-hmm. Yeah, so, and Christy touched on it a little bit here earlier. These are seasoned investors, and it's also for first-time investors, but you're not having to come with a stack of lease agreements or tax returns. We are just qualifying this borrower on how that subject property is going to cash flow. So Christy, talk about, you know, again, I flew right past this. Talk about the credit required for this borrower, just to help our audience here a little bit.
Yeah, so the first thing as far as credit goes is going to be the trade lines. So we are going to be looking for 3 trade lines for 12 months or 2 trade lines for 24 months. And we need those trade lines to have activity in the last 12 months. We do allow for some delinquencies on both consumer and mortgage history. They can have 2 30-day lates on the consumer in the last 12 months. And we do allow for a 1 times 30 on a mortgage in the last 12 months as long as the prior 13 to 24 were at 0.
Yeah, that's pretty incredible, mortgage late and giving an investor, financing for an investment property. So, Javi, talk a little bit, we have a lot of questions about the LLC here. Talk about how long does it have to be seasoned? Give us just some good general information about the LLC, please.
Yeah, so LLC, kind of Christy touched up on it before. It's not the business credit that is going to go under, it's personal credit. These LLCs do need to be created to manage rental properties only. That is a big thing that we look at. And anybody that's on that LLC as an owner does need to be on this loan. That's a big point to know, especially you're going to get some borrowers that maybe have their wife on that LLC as well. Both need to be on the loan. But yeah, the LLC does need, it is title vesting. A lot of people are going to ask you for this loan especially.
Yeah, great. Thank you for that answer. We've mentioned first-time investors are allowed. And Christy, you touched on it, but talk about how many properties they can have financed, how many properties they can own. Just touch a little bit on that too.
Yeah, so there is no limit on either of those. There's no limit on the number of properties that the borrower can own. There's no limit on what they can have financed. I mean, like Javi said earlier, I did have one that had over 40 properties, and that was a lot of work for the processor. But really what we're looking at with those is they do need to be on the schedule, and we do care if they've been paid on time. But again, we're not going to look at those for whether or not they cash flow. We're really only going to look at the subject property. So I think that's something important to keep in mind with all those other properties. So you don't have to get, in this case, 43 lease agreements.
Yeah. So Javi, a couple questions pointed at you here. Talk about how is the debt service coverage ratio calculated, and then talk about the different iterations, and feel free to grab your matrix there because we've had a lot of changes lately. So, but if you could just talk about the debt service coverage ratio. Cassie was asking a couple of those questions there too. So.
Yeah, so essentially this is what this program is based upon. That ratio is going to measure that cash flow. So we're going to get the form 1007 on an appraisal, right? We're going to see the comparables in the area, see what they're renting at. Once we grab that average rent, we're going to divide that by the PITIA. That ratio right there is essentially what we're looking for. We're looking for a 1% or greater for that property to cash flow. But I mean, what I love to say is kind of forget everything you know about this program, because even if it doesn't cash flow, we still can do this deal, right? So if they're at a 75% LTV or less, we can actually waive that DSCR requirement and go no DSCR. So essentially, if they have the assets for it, and that property is obviously, the appraisal needs to come in clean, good value, good standing, but they can still close this deal even with a negative cash flow, and I think that's huge.
Yeah, Javi, I'm going to ask you to repeat that because I really want everyone to pay attention here. So repeat that. So we can do a negative cash flow property, provided what?
Yeah, let me take out my megaphone. We can do a no DSCR loan.
That's great.
We can do it. We waive it. Yeah.
That's a classic right there, buddy. I love that. I love that. Christy, talk, because these are, from first-time investors to savvy investors, talk about how the 40-year interest only works, because we do see a lot on the 40-year because to help cash flow and how they qualify. So if you could just talk about interest only a little bit.
Yeah, so with the, as far as the qualifications go, we are going to use that fully amortized payment, to divide into that PITIA. So they do need to cash flow with that payment, but the interest only does give that investor the opportunity to hold on to a little bit more of their cash. And investors really are, cash flow focused. So it gives them an opportunity to have a lower payment on that property for the first 10 years.
Yeah.
And a lot of investors are willing to take that negative DSCR because they really are looking at the long-term return on these properties.
Yeah, what's the greatest way to accumulate wealth in this country is real estate. So, yeah. Javi, I'm going to ask you to repeat something here because I don't think Bill, excuse me, I don't think Bill believes us. So we qualify. How do we qualify the subject property? Do we look at anything else on other properties they own? So we're going to answer this question specifically for Bill. So
we'll use the DSCR, that calculation, and if that DSCR, the measurement of the cash flow, doesn't cash flow, we can still do the deal with a no DSCR at 75% LTV.
Yeah.
And it's for the subject property only. There's no other property. Perfect.
Christy, can we use 1031 exchange on this?
Yes, and we do that all the time. Absolutely.
Right. Javi, I know you probably had a couple of, we get a lot of cash out. You mentioned hard money lenders. Talk a little bit about how you get a lot of, multi-packs here for cash out so they can go purchase other properties. So kind of allude to that a little bit.
Oh, yeah. So you'll see a lot of times when you're marketing out this program, someone's going to call you that they have their seasoned investor, multiple properties, and they just want to add to their portfolio. So they're going to go ahead and cash out on multiple properties. We can do them all at the same time. It doesn't have to be close one, then the next one, then the next one. We can close them all at the same time, and they'll get all that cash out to go buy their next property. And the best part is that property they want to buy, send it right back to us, and we'll do it on our investor cash flow deal.
There you go. Yeah, and one of the things, I want to explain to everyone here is, we have guidelines, right? It's usually 5 properties or $2 million in exposure. We have an AE, she's in the Tampa St. Pete area. She did a 10-pack of on debt service coverage ratio, and the borrower wanted to do cash out. Like Javi said, you're listing all those properties on your schedule of real estate on the loan application. We know that borrower is a seasoned investor, and they were taking that cash out to go purchase some more properties. So, Christy, talk about, a good outlet maybe is hard money. Talk a little bit about that and some experiences you've had.
Yeah, absolutely. It's funny that you say that, John. I'm going to tell you a little story about yesterday. I had a borrower, an investor, get in touch with me because he thought that we could do a loan for him, and that's not something that I can do. I don't have an MLS license. It's not something I can do, but he found Angel Oak. He's done all of these investment properties prior through a bank, and he was really unaware. And then also through hard money, he uses hard money initially and then through a bank. But I thought it was so interesting that there's a huge opportunity. This guy owns 12 properties. He would initially purchase them with hard money, refinance some of them through a bank, but now he's kind of hit that cap. And what an opportunity if someone was working with that hard money lender, to get some of that business. So definitely create relationships with your hard money lenders, and with your realtors, of course, that focus in the investment, arena.
Yeah, thank you, Christy. Javi, talk about prepayment penalties, and specifically, John has a question here about states with no prepayment penalty allowed. So if you don't mind covering that.
Yeah, for sure. So we have a standard 3-year prepayment penalty. That is for this all investment properties. You can buy that down or you can buy it out. If you want to buy that out, that's going to be through cost, but you can buy it down through rate or cost. Also, if your borrower tells you that they're planning on keeping this property for a little bit, they're not planning on doing any multiple payments, you can add a 4th year and get them a rate benefit, and they'll appreciate that big time. Or a cost credit as well. But in a market like this, you're going to love that rate benefit, and they'll love it too.
Yeah. Christy, you mentioned this earlier when you went over the trade lines and allowable lates and stuff like that. Amy's wanting just if you could repeat that again,
Yeah.
What we allow.
Yes, no problem. So on the consumer, we will allow for 2 times 30 in the last 12 months, and we will allow for a mortgage late in the last 12 months, as long as, months 13 to 24 had 0. And I don't think I mentioned this before, but on the flip, if they could have 2 lates in months 13 to 24, if they had none in the last 12. And, it's one of those things, these are small details, but often they become important, and they create an opportunity for us to close a loan you wouldn't be able to close elsewhere.
Yeah, great. Yeah, and then Javi, David's asking about the down payment and closing costs, seasoning, and might as well ask the next question. It hasn't been asked here yet. Can it be gift funds?
So for this one, there are no gift funds, unfortunately, but it's up to 80% LTV, so 20% down is going to be the minimum. We started FICOs at 680, so it kind of works like a little staircase. Depending on what FICO, if you're at 80%, you're going to need at least a 720, I believe. So that's a good thing. Actually, I'm sorry. I think we might actually go down to 680 for 80%.
Yeah, a lot of things have changed lately. So go ahead, Christy.
Yeah.
Yeah. So Christy, talk about
right in the middle.
reserves. Yeah.
Yeah.
Sorry.
We've had a lot of changes, so that's why
there's been a lot of enhancements for the better lately, and so things are constantly changing. Another question here, Christy, about reserves.
Yeah, so one of the great things about the reserves, and something that I find originators new to this program find exciting, is that we're only going to look at the reserves on that subject property. So that's a big difference. Conventionally, you're going to have reserves on all of your debts. And if a borrower, again, owns 20 or 30 properties, that can become challenging. But we're going to look at reserves on the subject property only, and they'll need to have 6 months.
Yeah. And then, Javi, can cash out be used for reserves?
Yes, they can.
Yeah, that's big. And a couple more questions here. We asked about gift funds. You might have to look this up because it might change. I'll throw this out to both of you if you want to ask the question. So seller concessions, because seller concessions are becoming more and more of a as the market balances out from a buyer to seller to buyer, as it starts to even out. What are our seller concessions for this debt service ratio?
So I believe, Javi, it's still 3%, right? It's 3% on the non-owner.
3%, yeah, that's right.
Excellent.
Yes, right.
Yeah, but seriously, right? People haven't asked that question lately because it's been a seller's market. So now the tide has shifted a little bit. Yeah.
Yeah, it's coming back a little bit.
Yep. A couple other questions. Scott, we asked that for cash out. We can use those reserves. Javi just talked about the minimum down payment is 20%. Christy, how many units will we finance up to?
So we will go up to a 4-unit property. At 2 to 4 unit properties will be limited to a 75% LTV.
Yeah. And Raymond's asking here, what about if they own their, it's kind of a off the cuff, what if they own their primary outright? Can they still purchase an investment property?
Oh yeah, that's great. I mean, It shows they know how to pay a mortgage firstly, but yeah, I mean, it shows that they own a home, they own it outright, so even better to them. Hats off to them.
Yeah, and congratulations, right? Paying off that home. So,
Yeah, yeah, one less payment.
yeah, exactly. A couple other quick questions here. We talked about seller concessions. We still have some questions coming in, but I know we want to talk about our quick quote. We want to talk about some marketing tools. Javi, take us through some of the highlights, because there's been a question here. What about citizenship? Let's talk about, our foreign national program, because it does come, it is qualified similar to our debt service coverage ratio program.
Yeah. So this program essentially mirrors our DSCR program. It is a DSCR program. It goes down to 75,000 up to 1.5 million. Max LTV of 70%, but a great benefit: no foreign or U.S. credit. Right? These borrowers are living outside of the U.S., which is a big point. All foreign national borrowers live outside of the U.S. And they must have one of these eligible visas you see right down there. We give you a little list. But one of the big things to write down, take a note of: assets. Assets must be in a U.S. FDIC insured bank for a minimum of 30 days, at least 30 days, but they need to be seasoned or sourced for 60 days. Okay, so they can be 60 days in a U.S. FDIC insured bank or 30 days, but they need to be sourced for 60 days. So if they're in another bank out of the country, we still need to source it for those other 30 days. We go up 12 months minimum reserves are required, and no gift funds allowed, just like the previous program.
Yeah, so, and if they're from one of the questions we usually get, if they're from one of those visa waiver countries, all they need is a valid passport, right? So we get a lot of that question from, obviously Canadian citizens. All they would need is a valid passport. Mendy, we're going to get to talk about rates here. Javi's going to take us through our quick quote tool, as we still have some questions coming in. We do not lend on manufactured homes, so I just want to let Adam know that. So, Javi, I'll throw this question out to you. This is more about the DSCR program, and I'll flip back over to that screen. Because, how is there a minimum for how long they have to own a primary?
A primary? No, not really. I mean, we like to see them own it for a little bit and, have some sort of history of making that payment. But if they bought their home, I would say 3 months is a good kind of area to have it. That's what I usually tell. 3 to 6 months is really a good range to see that kind of mortgage history. That would be best.
Yep. Yeah. So, Christy, you answered this question earlier in this week, and it's so funny. The next question came up here about foreign national and I-10. Kind of talk a little bit about that.
Yes, I think that's typically where I start with the foreign national program, is identifying the difference between the two, because there does seem to be some confusion in the market. But these are very different borrowers. As Javi said, the foreign national borrower is going to live and work outside of the United States. It's the first thing that we're going to look for. With the I-10, those are typically borrowers that are living and working in the United States, but they only have an I-10 number and not a social security number. And that is not a program that Angel Oak lends on.
Yeah, thank you. So hopefully that answers the question. And then a couple other questions before we go into, Javi, kind of this is a unique question here about log cabin style homes. I mean, can we do that?
So log style, yeah, we do log cabins, but it can't be rural. Many times you see a lot of log cabins with a lot of acreage. We have a max acreage of 2 acres, but it can't be rural. For this program, there's no rural properties allowed. If it, has a ranch, especially income producing, you don't want to see it. But maximum 2 acres. But yeah, we can do log cabin homes. Especially, it has to be typical for the area as well. I just want to put that note.
Yeah, and Anthony's, if you don't mind putting your email or contact information in the question box, and we'll get an account executive to reach out to you with regards to, someone owning a primary for 10 months. So we'll get someone to reach out to you. Again, just some housekeeping. This is being recorded. We will get a copy out to you before end of day tomorrow. And if your question doesn't get answered here, your AE will reach out to you no later than tomorrow morning and get your questions answered. So a lot of great questions. Thank you, Anthony, for putting your email in there. We'll get someone to reach out to you. So question here from Thomas is, can they roll existing rental properties into a DSCR loan? So I'm going to assume the question from Thomas is, can they refi, obviously, previous rental properties? I mean, go ahead, Christy. I'll let you jump on that.
Definitely, absolutely. This program is available for purchase, rate and term, and cash out.
Yeah, and like what we mentioned earlier, some of our audience may have jumped on a little later. These loans usually come in packs, right? This is usually, if it's a seasoned investor and they're wanting to refinance previous investment properties, they come in multi-packs. So, and I know the next question is going to be answered, can we do a blanket loan? No, each property has to be done individually. So a lot of still great questions coming in, but we want to get to a couple of great tools here. And again, everything's being driven from our website. Everything here, this isn't a slideshow. Everything's available to everyone here on the website. So Javi, I'm going to take us back to our homepage. And if you could just take me through, because Mendy talked about, she wanted to see rates. If you could just take me through one of our great tools that we have on our website.
Yeah. So right here, you see our homepage. What I call it is like on a Monopoly board, it's your go. This is the starting point to everything Angel Oak that you'll need. Right here in the front, you have 5 options right here. The non-QM quick quote is the one you're going to want to open to see pricing for these programs.
All right, Javi, take me through a scenario.
Yeah, so depending on your channel type, you're going to want to select. Today we'll go with a broker, just for example. And then right here, you're going to see 3 blank spots. You're going to see it's going to ask you for your scenario. We like to make this simple for you guys. We don't like to ask for too many details. That's what your AE is for. You'll talk to your AE and review all that. But for simplicity, we ask for these 3 things just to start off. A loan amount, you could put, I guess, 250 to put it in a mid-range. Right, credit score will go around 740 or 780, even better. That's a good borrower. And then LTV, we'll go ahead and put 80%, or let's say 70%. Let's say they're interested, really interested. I want to get this.
I like that.
So then, right now, John, if you could scroll down really quick, just want to show something really quick, how easy this is. You'll see right away on the bottom, rates and programs is going to give you some bars depending on what you have already in there. But those are going to be our full doc programs. That's not what we're looking for. Today, we're looking for the investor cash flow DSCR. So after you go a couple steps down, you'll see income documentation. You'll have all of our non-QM programs right there. We'll select DSCR investor cash flow. All right. And it's going to give you an error because it's for investment properties only. So we'll select investment. And you'll see as you scroll down, boom, bada boom, you get pricing super quick. Super quick pricing, minimal details. We don't want to play 20 questions with you guys. You guys have time and you'll get your rate and pricing right there. Now, you'll see some guidelines, some kind of details there. But John, if you'll click view rates, when you open that up, you'll see all of the different pricings. Will give you price via percentage or via cost, so you can give it in kind of a tangible way to your borrower. And you'll see the pricing there, 7.999 at 100.125 with the cost, which is a lender credit of 312.
Yeah, Javi, thank you. So, this is, again, people are going to say, wow, these rates are for someone who's not putting their income, their job information, no tax returns, no lease agreements. This is just on the subject property. So, I think everyone has to get out of their little comfort zone from the last 24 months of, record low rates for, a decade and really be a consultant. And, there a lot of these investors are aware of these rates. I mean, like Christy said, she's had borrowers reach out to her directly. So and another question here, Mike's asking a question. Mike, these webinars are recorded. If you registered or you attended here today, we will get a copy out to you by end of day tomorrow. We also have, I'll ask our marketing department to send out a link to include with this other previous webinars, but I would tell you the previous webinars, we've had so many enhancements that it's really important for you to look at today's webinar. And then next week, we're going to be doing a one for full doc and really how to find a lot of these borrowers. So we appreciate it. Last week we did bank statements. So, you know, if you want to email me directly, I'll get you a copy of last week's bank statement webinar. So Javi, let's continue to go through here because everyone's asked also, well, how do I get you to do a pre-qual for me? And Javi, let's talk about how easy this is to pre-qual.
Yeah, sure thing. And before we go to that next step, if I could just say, guys, we do price daily. So make sure you're talking to your AE, making sure that pricing is still up to date. Your AE will help you with that. Just give them a call and just verify everything, okay? We don't want you to give the wrong information to your borrowers.
That's
all right? But yeah, let's say you're ready to go. You're like, heck yeah, this is awesome. So John, if you could go ahead, select one of the options there. We'll show you how quick and easy it is to upload.
Yep, there we go.
You select your rate, you select option. And now, sometimes you see a blank screen like this and you're like, oh, here I am in the loading screen. All you got to do is scroll up and you'll be at step 2. Step 2 is you'll see already ask you for your Mismo file, 3.4. You can drag and drop it in there. If you don't have it, don't worry. You don't need it right at this step. We'll ask for it later. So you just hit next and skip that. All right. And you already see upload documents. They're going to give you a nice little summary. You'll be able to pick your account executive. You'll see a list of all of your AEs here. Please select the right AE so that they can get that notification that you uploaded it to them. You'll submit your company information, your borrower, and so simple. Just drag and drop. It's that easy. Once you drag and drop your 1003 and your credit report, that's all we need, 1003 and credit report. That'll go to your AE. We'll go ahead and we'll pre-qualify that borrower and make sure that they're ready to go into underwriting. So, yeah.
So Javi, you know, I mentioned earlier, 30% of the loans we close don't meet our guidelines. How long does it take to get this pre-qual back usually?
Oh, I mean, I've been doing these pre-quals same day. These kind of, this investor cash flow, honestly, is if you fill out the 1003, like I said earlier, the correct way, you give us the whole story. We have the credit report. I'll be able to look at it same day and send it back to you. Now, obviously, it's depending on the date and time. Just get with your AE. Usually, a 1-day turn time for this quick qual is typically the average.
Yeah, and Javi, the great thing about this, we will do a pre-qual on a TBD, right?
Yes, we will. If they're still looking to shop, yes, we will. And we'll see how much they can actually qualify for according to what maybe they've got.
Yeah, so again, you know, Javi, Christy, any of our account executives across the country, they basically do a pre-underwrite on this. So as Javi mentioned and Christy has mentioned, you know, just fill out the 1003. We don't want job information. We don't want income information. We do want their assets because assets help us get a lot of exceptions. So just for that, you know, sidebar there, and list their schedule of real estate, and that's it. We don't need lease agreements. We don't need, you know, reserves on those other properties, as Christy mentioned earlier. So, so pretty easy. And again, everything's done here on our website now. And you don't need to be approved with us to get a pre-qual. Well, you do, but Christy, you do need login credentials, and we're going to talk about how to market this. But before, let's. I do want to bring up one little PowerPoint slide. Let me know if you guys can see this. Hold on. Christy, can you see that?
I can.
Okay, great. So a couple of things we just want to, before Christy takes us through our marketing portal to really show some really great tools we have on your behalf, I did want to share some stats on investment loans. 34% of them are rentals out there. 70% of those rentals are owned by individuals. So just think about that. And then we talk about, where do you find these cash flow borrowers, right? A lot of times you can start with your referral source, which are realtors. Other large banks, they're not doing debt service coverage ratio loans. Hard money lenders, Javi talked about that earlier, right? CPAs and tax preparers. I want to bring up went to an industry function last night. And one of our account executives here, he and I were at this industry function, and a certified public accountant was in the crowd. We were talking to her. She never even heard about these loans, whether it's a bank statement loan for a self-employed borrower or a debt service coverage ratio. So go out there. If you're all getting ready to plan to do your taxes in the next 60 days, talk to your CPA and let them know about these type of programs. 80% of you have not originated a debt service coverage ratio program, and the other list of other ways to market. So I'm going to get back to our home screen here. Christy?
Yeah, John, if I could
Sure.
just say something really quick. Yeah, guys, really lean on your realtors. That's the first point there. And realtors just aren't a good spot for referrals, but they themselves could be borrowers. You know how many realtors go out to show properties and the borrower's like, no, I don't like this property. And that realtor looks at it and it's like, that's a really good property. I want to maybe invest in that. You have a program for them right there. Lean on those realtors. Also, Christy's going to touch up on it now. Advertise to them, use them for webinars, use us for webinars. I'll let Christy do the rest.
Yeah. Javi and Christy are marketing geniuses. So go ahead, Christy, take us through this.
So yes, something that I really, really love about Angel Oak is that we invest in our relationships with our brokers. And one way that we do that, invest in your success and try to help you to be more successful in the non-QM realm, is through free marketing materials. So if you are an approved broker, you're going to have access to these materials that you can use to advertise the programs with, not on your social media directly, to the community that you're in. Also to your realtors. There's specific flyers. I'll give John a second to log in and we can kind of go through that. While he's doing that, I touched on, just really trying to invest in that relationship. I think we recognize that as loan officers, you wear a lot of hats. You're trying to manage your referral relationships. You are, dealing with borrowers and loans that are in-house. And now more than ever, you're probably trying to figure out, how can I market myself? How can I get my name out there more and get a bigger piece of the pie? So hopefully one way you can do that is through our portal's marketing materials. So John, if you can click on that marketing portal there. And let's start. You start where you want to start.
Flyers.
Find the investor cash flow flyer there, or the, either one.
Oh, there we go. Sorry.
There we go. So something that you're going to notice when this loads is you're not going to see Angel Oak's information on this flyer. Again, we're here to help you to build your brand and help you to become a non-QM, specialist, a professional in the non-QM. So these are highly customizable. John can just maybe change a few of these tabs. We won't go all the way through it, but you'll see that there's a spot there to upload your logo, to upload your photo, to put all of your personal information in there. So this really looks like marketing material that is, it's white labeled for you. It's your marketing material. It's not building the Angel Oak brand, it's building your brand.
Yeah, and Christy, great thing there, if you fill it out for one of the flyers, it populates all the flyers we have. We have them in Spanish also. So Nora loves our whiteboard videos. There you go, Nora. Thank you.
Those give a lot of information in a small, in a short amount of time. So I love those too. So that's flyers. Where do we want to go next?
Social media.
Okay. So obviously social media is an excellent place, to build your brand, to make everyone aware of what you do. It's interesting. I wonder if he's on here. I have this loan officer that told me he's been doing this for 15 or 20 years. And about 10 years ago, his aunt bought a house using a different loan officer. And his dad said to him, well, it's your fault. She doesn't know what you do. So it's interesting how many in your life maybe don't know what you do. And social media is an excellent place to make sure that those in your circle and in your community are aware of the services that you can provide. So the great thing about this, again, is that hopefully it takes one thing off your plate that day. Maybe you want to talk about specifically this investor cash flow program. The verbiage is already there for you. The image is already there for you. You know, it's a quick 2 seconds and you have a social media post out there to let everyone know what you do. So definitely take advantage of these. Today we're talking about the investor cash flow, but you will notice that there are options for all of our programs on there. And you know, you have images and verbiage to choose from. And of course you can change that verbiage up a little bit. You can use it, you can make your own, you can add your hashtags, but hopefully this just allows you one less step in the day.
Yeah, Christy, it's like, I love the way you presented in the beginning. You know, it's like we've really invested in, you know, our customer success, and it's amazing how many people don't take advantage of this. So please, you know, if you get off this call, if you do one thing, test this out on social media, please. It's all the content. It's been done for you. All you have to do is copy and paste. So. Well, I'll just show the whiteboard videos. They're here. I won't play one, but they're no longer than a minute long, Christy. And I'm going to let you talk about, you know, probably the most powerful presentation you can have Angel Oak do on your behalf. So go ahead, Christy.
Absolutely, the realtor presentation. And I promise you, wherever your account executive is in the country, they want to do these presentations for you. We love talking about our programs. We love talking about our products. We love talking about our company. It's something that we would love to do for you. And like John said, the percentage of our originators that take advantage of it is pretty low. And we would love to see more of you, because every time I get an originator that takes advantage of this, they love it. You know, they walk away with loans, they walk away with new relationships. And it's just something we really encourage you to take advantage of. So we have no shortage of bad jokes around here, and one of them that we tell is that we are in the witness protection program when we show up. We are not there to talk about Angel Oak. Again, you won't see us coming in with our Angel Oak name tag. You won't see our brand on the presentation at all. It's going to be branded for you. What I do if I'm doing this realtor presentation is I take and I put the logo of my originator on there. Their contact information is on there. I'm just there as one of your investors to talk about the programs that your referral source will have access to if they work with a loan officer like you. You know, yes, they can get conventional anywhere, but they will see that working with someone who's a true professional in non-QM is also going to help them to increase their closings. And again, in this market, that is something that everybody is looking to do. So reach out to your local account executive and set up one of these presentations. And if you have 3 realtors in the room or 30 realtors in the room, we're just as happy to do it.
Yeah. Yeah, I always say, you know, I use the statistic that 9% of the loans we close on our bank statement program, which are for self-employed borrowers, 9% are realtors. So you get 12, 13 realtors in a room, you're going to probably get one of their loans, right? I mean, it never fails. And if 80% of you have not originated on this call, have not originated a debt service coverage ratio, you probably haven't done a bank statement loan, and you probably, and just think about your referral source, how much they don't know about these loans. So you just, the more people you can educate and inform, and Christy and Javi and any of our account executives across the country, they're experts on it. I said it earlier to you, Christy, today. We were at a trade show earlier this week down in Austin, and our AEs are the best in the business, I promise you. And they will represent you on your behalf better than anyone else can and will. So I'm going to get off my soapbox there. So,
but I think support is something that's really important, John, to make our originators aware of, and especially those of you that are on here today saying, I've never done one of these loans. Sometimes something new can make you feel a little insecure about that, right? Because you want to be a professional, you don't want to make mistakes, but your account executive is going to be there to support you all the way through that loan process. And until you are a professional, and even then, we will be there to guide you through it, what we can do and what we can't do.
Yeah. So Javi, I'm going to let you, because I know you want to get in here. Bill, we will do these in person or via Zoom or go to webinar. So we'll do it any channel you want to use. like I said, Christy mentioned it earlier. We're chomping at the bit to do these because we realize how underserved these borrowers are, and we just want to get the word out and realize that, again, the fastest way to accumulate wealth in this country is through real estate, whether it's buying a primary or purchasing an investment property. It's inevitable that you build your wealth that way. So go ahead, Javi, take me down a different path here. I'm stumbling over myself.
No, I was actually going to stay right on the marketing portal. Honestly, if you guys aren't on social media, get on it ASAP. It's 2023. Everybody's on it. You don't know how much business you're missing just by not being there. All you have to do is create an account and put your name, and you might get a call right out of that. Sometimes social media markets for you. They'll put you on an ad, and just by having your name there, like you said, your own family might call you. They might not even know that you're a loan officer, which is crazy, but it's true. It happens. And if you're not on social media, I mean, all you have to do is create the account. We're giving you the post. You don't even have to think of a post. We have it there for you. Use our whiteboard videos. They're downloadable. And like he said, realtor presentations. I myself have been in a conference room from my office on a Zoom meeting. They put me on a giant TV, and I sat there and I talked to them. Short presentation. The realtors got it. And right out of that, my loan officer called me right after. Hey, one of my realtors has a loan for themselves that they want to do using this program. And it's that easy.
There you go. It's really, and you know, we spent probably more time on this than we have in the past because we really know how important it is. You've seen loan level pricing adjustments on second homes and investment properties already start hitting the agency world. That agency box is getting smaller and smaller. And you know, I threw out some statistics about the purchase market being down 10% this year. Refis are going to be down, projected to be down 49%. You guys have to open up your channels, and whether it's through social media, realtor presentations, whiteboard videos that Nora loves. Thank you, Nora, again, for loving our whiteboard videos. So, Javi, anything in closing, Javi, you want to just add?
Yeah, just lean on your AE. Guys, this is what we do. We're here for you. Give us a call. At least I know most of the AEs coast to coast. We work day and night for you. Guys, you guys give us a call. If you're stuck on anything, give us a call. We're the subject matter experts, just as John presented us on these programs. Don't be afraid to give us a call. None of us bite, I promise. So just give us a call as soon as you need help. If you have a scenario, and we'll guide you through it.
Yeah. Christy, anything else?
Just, I want to echo what Javi said. He said it perfectly. You know, sometimes we get originators that are new and they'll call and they'll say, Christy, I'm sorry, I have one more question. I'm sorry, is this too much? We love what we do. We love talking about our programs, and we're here to support you. And we're proud of the fact that we're subject matter experts, and we don't mind showing it off every now and then. So I just want to echo what Javi said.
Yeah, thank you. Guys, you know, Javi, Christy, thank you for taking time out of your day. Thank you, everyone, for joining us. I just got a couple other things to add here at the end. If you could take the survey, things we could do better. We're always looking to educate and inform people any better way we can do it. We'd love it. We're open to feedback. Next week, on Thursday, the 23rd at noon Central Standard Time, we're doing a full doc, and we're going to probably lean a little bit more towards some marketing ideas on that also. So, you know, if you've registered for this, you can register for the others. This is being recorded. We will get this out before end of day tomorrow. If we did get a ton of questions here. We didn't get to them all, and I apologize for that. But we will have your expert AE reach out to you no later than tomorrow morning. And just so everyone knows, my email address, if you want to email me directly, John J, J-O-H-N-J @angeloakms.com, ANGELOAKMS.com. So I know I've interacted with a few of you on the questions here, so feel free to email me directly. But for those of you that have closed a loan with Angel Oak, we thank you for your business. For those who have not, we look forward to closing loans for you and growing your business in 2023. So everyone have a great afternoon. Christy, Javi, thanks again. Appreciate you guys. You guys are always great. Good afternoon.